Good morning. Welcome to Market Monday. The markets closed today as we honor the federal Juneteenth holiday. As we know by now, the Fed paused rate hikes as widely anticipated. Was it a pause or was it a skip? Oh yes, Fed watchers have been breaking out their dictionaries to parse through its motives. Major difference being a skip indicates further hikes after this temporary pause. In that case, it's a skip, as the Fed indicated there would be not one, but two more rate hikes coming later this year. That, of course, had the market narrative machine humming as folks began teasing apart every line of the statement. While the media sorts out the pause versus skip debate, in the meantime, a couple items to note. Last week, the latest CPI inflation number came in, and you guessed it, the trend continues lower, now at just 4%. In fact, coming off the peak of 9.1% in June of 2022, every single month has seen lower year-over-year inflation. That makes 11 consecutive months of deceleration, which is the longest streak since 1921. Add to that, the US unemployment rate has now been under 4% for the longest streak again since 1970. What else? Last week, we also got another Barron's magazine cover. Don't fear the bull market. Here's why stocks are going higher. Uh-oh. As we've looked at many magazine cover indicators in the past, many times these are contrarian indicators, meaning whatever appears on the cover has already happened and something else lies ahead. This cover is right here on the S&P 500, here on the tech-heavy NASDAQ, right here. Here's the August 22nd cover from last year. Sorry, we're in a recession. That's right here on those indexes. And here's a great one from December 20th, 2021, the 2022 Outlook issue. Expect further gains. 10 stocks we like. And here's that one right here, right at the peak. This is clearly not a timing indicator, nor a reliable scientific approach. But as we talk about so often on Market Monday, it's helpful to be aware of the narrative as it often marks near-term inflection points. Case in point, here's a look at Goldman Sachs price targets, meaning at what price they expect the S&P 500 to end the year. November 16th of 21, right around the peak of NASDAQ, raised the price target to 5,100. Market starts 2022 lower right out of the gate. Goldman lowers their price target. Market lower through March, lowered price target again. Even lower through May, we all remember this. Yep, you guessed it. And lastly, as we know, bottoming in October, and you can't make it up, Goldman lowers again. Yep, what's a self-respecting investment bank to do when the market rebounds? Raise their price target, of course, which they did on February 6th of this year, and again, just a couple weeks ago on June 9th, as the market continued grinding higher. All right, again, we don't do this to poke fun at anybody. It's just to point out nobody, not me, not any investment bank, can accurately predict the future, despite how tempting it may be to believe. Back at it next week. Thanks for watching.